All right. What's up, everybody? Hopefully everybody had a great weekend. Also great start to the week. If you didn't, well, let's recap on some stuff. All right, so I guess first and foremost, let's look at the market and let's see what is happening here with all the features and stuff. And I'm gonna be looking at the weekly time frame. And I'm also going to go over a few things real quick. Hopefully you guys can catch the bird's eye view on, how I look at things and why they won't be on my watch list versus some of the things that will be. Now, I already have the watch list tickers chosen already. So I'm already structured. So I have this main watch list, which we're going to go through right now. And then the stream breakdown, which is like some of the tickers that I have that I'm ready for the week. So you guys can look at some of the tickers that we're looking at for potentially some swing trades and of course some good day trades. Definitely look for day trades this week. Now the market's been a little volatile, and volatile would usually what that means is there's a mixture of buyers and sellers all across the board, and there's a lot of up and down movement. The up and down movement is what stops out a lot of people and what stops out a lot of swing traders as well. Gets a little more difficult for the swings, but not impossible to swing as well. These swings can be good, but it just depends on the type of setup that you're looking for. But then the day trades can be a lot more rewarding during these volatile times. The volatility is here just because of the VIX. So let's show you, not just talk about it. The volatility is here because of the VIX increasing. The only thing about the VIX is it did not make a higher high, meaning like it didn't break over that candle body. It's what I mean. Okay. It did break higher, okay, for sure, but it is still not going over these levels here. Again, I don't care much for the levels themselves. They mean nothing to me. All that this is just the volatility index that's creating a lot of fear in the market based off that. When there is no fear, when there is no crazy volatility, you just see this market moving naturally, which naturally meaning that the price action will be pretty easy to spot. Versus now the volatility is increasing the momentum all across the board, which is like up and down movement. So the moves are heavy, and they're heavy with volume. As you can see here, we finally got some red candles after making these all-time highs, and we keep making all-time highs. So looking at the characteristics of this, we've been having some pullbacks, but every pullback gets bought up. The difference here now is that we have some higher volume and we have some nice solid red candles, which is awesome. Just because we have red candles doesn't mean we're full-blown bearish and we're going to keep crashing. The only thing now that, last time that I talked about this, we did say that, any catalyst can drive the market down and it can cause a heavier pullback, and always be aware that the pullbacks can be aggressive at these levels. So the aggressiveness brings in volatility, but also catalyst comes into the market and adds on to the volatility. The catalyst now is, I think the news articles, some of the top headlines now are talking about recession and things like that. So whatever it may be, however it may play out, I personally don't care too much of it. I think that following the candlesticks, the charts, it's probably more important than anything else. But also be aware of those news articles, okay? Because those news articles will drive the market up or down. If you are a new trader and don't understand what the recession news was, please search it out, okay? I'm not going to go on here and explain exactly what happened and tell you every little detail, because that's not my job. My job is here to give you guys some good levels for the market and give you a nice opinion on this as to where we can potentially go and how to prepare yourself and what to look for as an experienced trader, a new trader, somebody who just barely started through the COVID, somebody who's been here through before COVID and all this stuff. A lot of new traders came in right here when this whole COVID thing happened. So all types of traders out there. So keep in mind, guys, there's a lot of fear. There's volatility. Doesn't mean we're going to come crashing down, okay? There's a short term, there's a long term trends, and these trends change, and you got to be able to catch the direction either before it happens, while it's happening, or after it happens, whichever one comes first. All right, so ES, I think everything's still fine. We can definitely see a little more room to the downside, and this is probably the level that we're shooting for. I think the 44 is going to be a psychological number, which we're right there. We're only 8 points off. It's going to be a psychological thing that most likely will head into this 42.50 level. A lot of people are looking into that, and I know a lot of people are saying that we're breaking this rising wedge. But you know, whatever happens, be ready for anything in this market. I just like the price action. I like the supply and demand. And if we can build more supply here, that would be awesome. If we can build a supply and drop down with a good pattern, then it'll make sense. If this thing just keeps on dropping heavily, then most likely the market will drop pretty heavy as well and bring in more volatility. So this week, I'm going to trade cautiously. I'm not going to take too many swing trades this week. Very cautious for sure. But here we do see some rejection already from this retest. All right, let's go on the 4-hour time frame. Let's just show you. Kind of pointed this out to you guys last week as well. Showed you these levels here. They actually never hit. The 44.80 was never reclaimed, but we did create this nice little base here just to show you. So it looks like a base drop. And here it broke that 44.30 right after that. So now we're looking for the retest candle. Okay, that retest candle, look for a nice little base or a pattern to create right inside. And it's either we're going to drop down or we're going to reclaim it. One of the two is going to happen. Okay, now when this decides to happen, is I am long over that 44.30. I am short on the 44.20. Okay, but I'm going to use this level here, the 44.30 and the 44.28, 27. And then I'm a start shorting here. I'm gonna look to short the top on the market. If this doesn't happen, my stop loss is at 44.30, and the 44.30 is a long position to 44.80, basically to stay in this range. This was a mixture of volatility when it came to the recession talks, and then the quad witching. If you don't know what that is, please go search that up as well. So it's a mixture of sell-off. It's a mixture of a pattern that played out. So a lot of confirmation to the downside. Now all we need is a retest. It's either a rejection or a reclaim, and we go back up. All right. This is just for on the 4-hour time frame. The weekly still looks like it still has potential to come down. But also, like I said, this market can do whatever it wants, however it wants, with or without you. Whether you're there to catch it to the top side or catch it to the downside, it's going to depend on you if you are ready for this specific move, or whatever it is you're waiting. The downside level, I'm waiting for this 43.75 level, 43.65 down here. So the bottom of these wicks, 43.60, yeah, 43.65, and then 43.78 area. I'm basically just trying to catch this base, okay? Right here. We technically broke below this little one. So this little one is like, it's a rally-based rally. And then you get the pullback, you get the retest and everything, and then we land right here, right inside. So we can technically land all the way at this bottom and then touch the 43.48. But I'm not looking for nothing major, of course. I'm definitely ready to understand what's happening with these ranges and how it's playing out, and then the volume that came in on Friday. So definitely got to wait till market opens on Monday and to kind of see where the market is headed in what direction. Are the buyers going to step in at these levels here around this 44 psychologically, or are they going to wait for this 43.75 level? Or are they really going to drop into this 43.50, 43, and then 42.75? That's kind of like the question that we're going to ask ourselves this whole week and kind of monitor what the market in general is doing, just because of the recession news that's going on as well. And then also the base drop pattern that's happening, and if it's going to continue to play out. So all I'm looking for to gauge in the direction is the retest of here. It's either we reclaim or we reject. One of the two is going to happen, and it's going to happen right here. Okay, so make sure you guys keep that specific level on high alert, which is right here. Okay, that 44.28 and then the 44.31. Okay, so psychologically 44.30. But that's kind of it for ES. Okay. We have tech. It's kind of the same thing. Same thing we talked about. What you want to do is, because we came drop-based drop, you want to look for the next major support, which we're kind of right there, right? We're right at that bottom, but then you have room to this bottom down here. Okay, so I'm just grabbing this base here, and then you want to grab the bottom of it, which is there. So that's how you would mark your levels. You just want to go look for the next area that was once a resistance that could potentially be support. If that doesn't hold, you look for the next one, and you look for the next one. Okay, for that's for NQ. That's for tech all around. And if you take a look at tech, right? So let's look at tech. Let's look at FANG. They all kind of look similar. All right. Facebook, drop base drop. Apple got that news, so it created a drop base drop. Amazon has just kind of been chilling. Okay, so Amazon's chilling out of the FANG so far. Netflix is just kind of holding as well, so keep eyes on Netflix if you're trading FANG. If you see NQ go green, feel free to go long on Netflix as well. If it rejects, then look for a rejection, but also look for this to hold itself. Let's look at the volume that came in on Friday. Nice strong volume at the closing. So Netflix might be a good watch for you guys if you guys want to keep watch on this. Definitely over 590, just the psychological, and then take it long to like that 600. That's what I would do. Google was on the watch list last week. The previous week before that, I've been kind of mentioning this, everywhere as much as I can, just because it's at an all-time high. So remember something that whenever you guys are at all-time high, what you automatically want to do is go look at the the ticker that's like way at all-time high, and kind of just gauge in and see if the sentiment is going to change on that. Change because let's just say we do go on recession, right? Just a simple conversation here. Let's just say we do go on recession, right? And for some reason, this market is crashing down. Well, let's look at BA. BA is already at this level, right? BA's already been shorted all the way here, right? Where is the reward in trading puts on BA? Okay, you really don't have much, right? We can technically drop down to this 190 level, okay? Definitely won't take anything away from this put play. But if you look at something like Google, look how much room it has to the downside. Look at this. Wouldn't you want to trade this versus BA? Like you're talking a huge drop. What if we come way down here? All right, I'm not saying that we're going to crash down within the next week, so start loading up on puts, all right? Not saying that. What I'm pointing out is that the risk to reward here will make more sense that if we do go in a recession, right? And this news hits hard in the market, and this market just starts dropping, and IV starts pumping, and it's like put plays all across the board, and everybody's so excited. All the bears come out and they're making these YouTube videos, and they're like, the world is crashing and everything. Come look at Google. Look at all the reward that it has to the downside. This can actually play out for you better while everybody else is trying to short something that's already shorted, right? Yes, we're at all-time highs. Yes, Google's a great company, but I'm looking for the sentiment to change with the market if the market does crash, right? If the market does come down, if it pulls back heavily, whatever terminology you want to use for a put play, use it. But that's what I'm trying to point out, that the reward will be so much better for you for Google versus trying to short something that's already short. Okay, so here with Google, it's been showing so much strength. It goes sideways, it goes up, it pulls back. It has like a couple red candles, and then it just drives up, and then over here we finally had some news right here on this day. I think it was here. I was actually able to trade this. It got some news now, and then here, look what it created. It created this nice Nice channel to the top side, which I think it was like a wedge or something like this. And then it broke to the downside, all right? And then it broke this level here as well, all right? Basically, sorry, not putting perfect lines, but just so you can get an idea. It broke the level here with the rising volume, and look how big the move is from 28.72 all the way to this 28.14. That's a pretty heavy move for Google. If the sentiment does change on Google, it can definitely be bearish and head down into these bottom levels of 2675 and 2700. That's kind of where I have my alerts at. If you guys go watch the previous video, you'll see how I charted Google, and you'll see why I have these levels and these alerts here. Okay, but just wanted to point that out. Microsoft, same thing. It looks like almost like a triple top, quadruple top, whatever you want to call this, but it looks like a lot of resistance, right? Here we have like 3 days, 1, 2, 3, 3 days, 1, 2, 3 more days here that we kind of showed a lot of resistance. So it almost looks like a top on Microsoft. I definitely have my alerts here. We never actually rallied up, but it is showing a nice bearish move here with the volume. So a lot of the volume increase came because of NQ. Like I said, you're watching NQ. If you're watching these levels to get rejected, same thing here. It's a long above or a retest for the short below. Could also break that 15265 area and continue to this 15133. So just make sure you guys are watching the market sentiment. If tech does come down some more, which it kind of looks like it does have room, but like there's a nice equal balance within these tickers, because look at Netflix. Netflix was the one that held, and then Amazon is the one that's holding as well. So Amazon's looking pretty decent. It just needs to hold here, needs to hold some good levels in order for the market to be strong as well with Netflix. So it'd be nice to see both of these tickers just rally on up all the way to the 610 for Netflix. I think Netflix can be a strong one. So take a look at that, all right? Just wanted to point out NQ for you guys. I'm personally not trading NQ. I am more on the RTY. I've been on the RTY, the small caps, the financials, the airlines. I kind of just been watching a lot of those, but I do have a mixture of tickers this week that you guys are going to see. So RTY is just kind of basing out right here too with some high volume. And the cool part is that it didn't really follow the market trend, and that it's actually holding this nice base here. It's basing out after we started dropping down, and on these weekly levels, let's see, just to show you guys, it's still kind of like sideways, which is amazing. Some of you guys might call it chop, but this is amazing. It's a big accumulation phase that's being created. So that's what I like about this. I like that it's building here, that it's holding volume. So I have my alerts right here over that 2230. Next target would be 2240 to 2250 area. Yeah, 2250. You can even mark it as 2249. But then I also have the bottom of like 2190s area. Down here, if it does break, because of the range, if it's the range, it's definitely going to come down or it's going to break up. I'm keeping it very simple with RTY. Gold looks like it got smacked down pretty heavy. So I don't know what's up with gold, but I think I'm still going to look for a dip buy down here, just to show you. Right down these wicks right here, this is where I want to buy the dip for gold. If not, I'm waiting for the breakout over that 1830 level. I think oil is still running pretty well. Nothing's really wrong with it. But like I said, the VIX, there's a lot of fear. But I'm still looking for the next candle to be red. If that is red, the next candle does go red, I'll look for a dip buy in the market. But yeah, kind of just want to show you guys that. And then let's go look at XLF. Let's see how it's doing. It's actually holding some good levels here. This is kind of like a nice level of support on the weekly time frame, as you can see here, right there. Airlines, look at airlines, what it's building. Actually building a nice little pennant. We're going to call this a pennant. Let's look. Just to be on the bigger picture, look what we're building. Okay. we're still in that range. So all my alerts are still on Jets at 2350. Once 2350 breaks, then I'm long. Once this 21 area breaks, then I'm short. Okay, very simple, no matter what the trend line may be. All right, so just a couple of things though. You know, I'm not really into a lot of this. Look at Qualcomm, looks super bearish, so I'm not really touching a lot of the chips. A lot of them look like they're coming down. AMD looks like it's coming down. NVIDIA looks like it has room to come down. You look at Nike. Nike looks like it has room to come down. There's a lot of tickers out there that showed a lot of bearishness, but then there's more stocks in the market that showed value as well, and Etsy is one of them. I think Lulu had a lot of strength as well. So a lot of the value stocks, PG made an all-time high while this market is crashing down. Like, come on. Roku looks like it's slowing down here, so low volume now. So there's a lot of things in this market that is still, you know, room for upside potential. Other stocks are trending down. You know, Starbucks looks like it has a nice bearish candle here, and it basically covered all this move. So that's definitely an engulfing candle on the weekly time frame with some increased volume, guys. So look for a change in direction, and a lot of tickers, like look at FBX. It's like a drop-based drop, and it's heading into earnings. So we're going to talk about that right now. So ATVI still coming down. You know, so just scrolling through a couple of these charts that still have value. Look at mRNA, still way up there. Chewy looks like is at a support. So tons of stuff going in the market, guys. All right, so there's still a nice balance across the board, and it just really takes some time to, you know, look at what has value for you guys, whatever you guys want to see value in this specific market, and what you're going to be trading. So, you know, I guess, you know, the question is, what are you going to look for? All right, are you going to follow the crowd and follow the news and follow the sentiment across the board and be bearish with everyone else? Or are you going to come in and look for something that's going to make sense? Are you going to look for a bullish setup? Are you looking for a bearish setup? Are you looking for a swing setup? Are you looking just to day trade or scout? Because the time frame that you go on and look on is going to depend on who you are as a trader in your account size. This is kind of like what I talked about last time with the 1K account. You got to have specific rules and specific tickers that you look for, right? My goal is to find some structure and to understand what's happening in the market. And when I do that, I choose the tickers that make sense for someone like myself. I want to find some discipline that I can focus on for the week. And of course, every now and then during the week, there are setups that arise. And it takes some time to just search some charts up. And I don't chart everything. I just look and to see what's going to have value. So for example, I do have BA charted. For this, now I go on the, let's delete these lines. I go on the 4-hour now, since I already looked at the weekly for a lot of these. And I go look at something that has value. Okay, while this market is crashing, what I said earlier is that why would you want to short something that's already shorted? That's not my mindset. When something has multiple red candles, I like to come in here and say, hey, where's that going to be the dip buy? Because I want to buy the dip. I want to have a good price point where I can get in and, you know, look for a good swing trade and for the top side, because my stop loss is going to be minimal. So for something like BA, I do have calls. My stop loss is way down here at this 210, right? Maybe you guys are wondering, like, well, Chef, why you let it go down $4? Well, I let it go down $4 because my reward to 222 is pretty big, right? So from 214 to 222, that's a pretty good reward versus a $4 stop loss, right? No matter what account size you have, you got to be able to look at it like that. But if you can't enter for a $4 loss on an option contract, then you shouldn't be getting in, right? I'm in this on some October contracts, and I'm adjusting with some day trades, which is making my swing trade basically free, stress free, and I don't have to worry if it goes red or green. If it goes green, then awesome, right? I just got to make sure I don't lose 100% of that red contract. That's it, right? That's my goal. And it's not going to lose 100% once it breaks this 210. Because if it does, I'll be in puts right away and I'll drive it all the way to 205. So I'll catch that $5 move, even though I took that $4 loss. So either way, my plan is here. But the reason I'm looking at this is because it's building this base, it's building another base here. The long trigger is 216. So from 216, we're heading back up to the 222 level. And then from 210, we're going to head down to this 205, right? So make sure you guys keep these alerts on BA. I'm honestly bullish on BA, but I can definitely be wrong. And if I am wrong, then that's okay because my stop loss is at 210. So that's kind of the game plan with BA. Snap is the other one, right? So this is one that caught my attention because it showed a lot of strength on Friday. The whole market was red, but look at Snap. It showed a lot of strength. So for this one, I am definitely going to keep eyes on this over 76. Okay. I am going to be going long. All right. Maybe the 75.80. Oh, sorry. 76.60. Okay. Not 76. So 76.80. All right. Just this candle right here. And the 76.65 is where I want to pick up a long position. If we close above here on Monday, I am grabbing a swing to take it to that 78. Okay, to these tops right here. This is what I'm reaching. This is my target goal. For some reason, Snap has been something that's been very healthy. And you guys may think, well, it's going sideways. Well, that's perfect because this is accumulation. First of all, it's showing strength while this market is coming down. Second, on Friday, one of the biggest red days that we've seen in quite some time, it's showing a green bar, okay? Third, the range on this, the plan, the potential that it has to drive all the way to this all-time high is very high, okay? So this is why I like Snap. I personally don't think there's a lot of reward here, but definitely good when it comes to strength. And it's basically 1K account friendly on the weekly contracts. Let's see. Let's check it out. Nope, I don't have it all set up yet. All right, I don't have it all set up, but we'll definitely look at this. I think I do believe though is 1K account friendly. All right, so we're gonna take a look at Snap. All right, so my long 75.80 to 76.60. All right, this is my area where I am gonna go long. Like I said, if we close here, I am going long for this swing and I'm taking profit around that 78.60, 78.60 to that 80 level. Okay, most likely I'll take profit here around the 80. If we do continue, if not, I'll leave it alone. If my alerts don't hit, I definitely won't be looking at it. You guys can get ready for the short position. You can, totally up to you guys, but I won't be doing the short position. CRM is another one. I think this one is more of a day trade. And again, I was kind of looking for tickers that were holding while this market was red. And CRM was one of them. It actually based out right here. And it drove on Thursday and Friday. We kind of just had like an inside day. We just kind of stayed inside. So if we break over that 261 or even 262, let me show you why. This piece here, we can definitely drive 264 would be like the first target. You want to grab this bottom right here. See that little bottom where we had support and then we rejected here, that 263.50 to that 264. That would be the first target for CRM. So that's what I would look for of a move if we do continue to drive. But look at the volume. The volume is pretty decent, so it's holding up this play. So this doesn't have to happen on Monday. It can happen on Tuesday or Wednesday, whichever day. Just make sure you have your alerts on CRM. FSOY is another one. I know FSOY has been on a huge downtrend lately. But again, this is another ticker that held while the market was coming down. And if you take a look, you can kind of see that this trend broke here. Okay. This trend here broke. to the top side. So if this thing wants to continue, I just go long over that 45. And the target by the end of the week would be 48. Okay, so that's kind of what I'm looking for. FSOY. If it doesn't hit, and my alerts, I will never know. Like I said, you guys can trade the downside. I really don't care for it, but I am looking for bullish plays. So here's another one. All right, I know I said I'm looking for bullish plays, but check this out. This is going to be our make it or break it. So if you guys remember KO from the last week as well, what I did bring up on KO was a little by the dip level, and I made this very clear. Okay, I said here, if we break below, it's going to be a drop, but we are looking for the bullish play. So we did get that bullish play to the top, and it hit that 56.40 level just like we planned for. And the next thing you know, I did mention about the dividend pay, and then it broke to the downside. And then again, if you guys kept your alerts, you guys were able to trade this to the downside, but that's only if you guys paid attention and did your homework. So I'm expecting kind of the same similar situation here with Pepsi. Pepsi has been building the supply level for quite some time, and you can definitely look for a nice bullish move if we do get one. If we do get one, it will happen right here. We will hold 154, and we'll probably hit that 155.50 level right here. We'll kind of see this green candle and maybe potentially see a downside, kind of like we did on KO, or we legit just come down on Monday and start breaking this level down, right? So this is going to be a very, very easy play. You literally buy at open at around 154. The 153.50 is your stop loss. So it's a 50-cent stop loss depending on your risk management. If you want to buy it here at 153.50 and then your stop loss 153.25, that's even more of a better play. Just depending where we open right at market open. So the pre-market level is going to have to do a lot. It's going to depend a lot on it. But look at the huge volume that came in right at the closing. This huge volume is going to determine the next candle. So the next candle is either going to be that dip buy, or it's going to be the continuation to the downside, which the downside does have a good reward down to this, like what I'm gonna use these wicks, so 150.70, and then ultimately you want to look for that 150 level for Pepsi. So this can definitely be a nice short if the market sentiment is still coming down, or it can legit just be a nice call play back to this 157. Okay, so I'm keeping Pepsi on the list. The other one is UPS, guys. You guys saw me pull up the FDX chart earlier, and want to talk a little bit about UPS. Everyone in the world who trades stocks is going to be looking at this daily chart. I hate the daily chart. I don't like it. Making that clear. Here's your gap. Here's your gap. Here's your supply. Here's your demand. Very simple. So the 190 level, if we start breaking 190, bearish. The sentiment, the direction that a lot of people are going to want to see is this gap filled. So we start breaking 190, build that position for the put play, and go for the gap fill. All right. I'm not saying that we're going to gap fill 100%. All right. This is why I don't like gaps, because when you look at the daily chart, there's a lot of missing data, and that's the gap fill, because technically this is a solid green candle. This is all solid green, and this is a solid red one. So you're technically missing data. But you can have that sentiment, you can have that mindset if you want. I will not have that mindset of a gap fill, but I will be aware that that level is smart, and we can definitely see a huge downside run. Or we literally just wait and we take it long over that 198. Same thing. You want to get that gap fill to the top. Like I said, I don't care for the gaps. If you guys want to play those gaps, by all means, just make sure you trail your position. Okay, so take that off. So that's all I really care about. I think UPS showed a lot of rejection here on Friday. It tried to push up. If you go on the 15, look at this huge move. So somebody decided not to hold UPS. This thing ran and it got smacked down. The minute it got smacked down, and it was an automatic put play. It's an automatic get in. and then write this thing down. So if we open down here and it continues, I am definitely going to be in puts no matter what happens. As long as we're below 190, I am in puts. If we're above 190, I am not in puts. Very simple, okay? Safe one to go long. If you don't just want to buy it right at open, I'm going to go long here. 191.60, just to give me that little more room, or even just a 191 or 190.60, however you guys want it. But anything below 190, it's bearish, and most likely it has a lot of room to the downside. So one thing I do want you guys to keep in mind is that FDX also has earnings, and FDX already ran pretty heavily to the downside. Nice run up, nice run down. We are at a good level for it as well. We are at a nice weekly level. This is a nice demand level. So anything can happen at this point. This can either have a earnings that'll, potentially drop it way down here or go way up. So we really don't know. I mean, this thing can stay sideways for all we know. You guys know that some of these earning plays, sometimes they, go crazy to the top, go crazy down, or just stay flat and kill everybody's premiums. Anybody who grabbed longs and shorts. So the sentiment is going to depend for UPS. With FDX, there's a lot of volume that came in on Friday again. Like I said, huge volume. So be aware that can happen for UPS, break to the downside with the FDX sentiment, or hold for the long side with the FDX sentiment. So whichever one comes first, make sure you guys are there. All right. Uber is a side watch for me. I'm not really a huge fan of this, but it is a smaller ticker. Anything over 40, I just want to go long. Sorry, 39.90. All right, 39.90. I want to make sure that I'm long. Other than that, I'm really not a huge fan, but I only have it on here just because it's a smaller ticker, and it's holding this nice base down here. Let me show you. Just holding this huge base down here. Nothing too crazy on that one. GM is the other one. GM, a lot of volume came in as well, but it was holding. As long as we can hold here, this 51 level, I think we should still be good to go long over that 50. What are these wicks? 51.90, so 52. Remember last time GM was on the list as well for CC team, and we have room to the top side, guys. Still room for pushing up, but we're gonna see. The other thing I want you guys to take note of, while this market was going red, some of these tickers held. Okay, so HD kind of held these levels. All right, we're still playing with these all-time highs. Low was the other one that held, so this looks like a rally flag, and then it rallied, but then it looks like a base, so a rally base, and then we can drive over that 209. If we hold over 209, I still think we can see that 215. So HD and low are two of the tickers that held while the market's been, volatile. So look at low and HD for potential run-ups, breaking the all-time high levels, or just hitting the all-time highs. So HD, like I said, it could probably hit that, and it could probably continue to run some more. MCD was the other one as well that I ended up calling out in the server, which was pretty cool. A lot of the members ended up taking some profits on this, and if they didn't, well, they probably didn't follow the trade. But this, I'm looking for an all-time high as well. This is actually holding with some good volume. And let me just show you on the 4-hour. The 4-hour, we were basing out. We had this resistance right here that I kept mentioning to the team, and we kept wanting to like build this little pressure right here, and then it finally popped on Thursday, and we took it long on Thursday. And then if anybody swung, they ended up taking profit around 244. But this thing still has room to run if it does hold while the market is coming down. Look for some of these value stocks, guys. All right, so PG, same thing. This thing made an all-time high. Like, see, made an all-time high this week. So just keep alert, guys. Make sure you guys are, choosing your watch list based on what you see value in. And as you can see, I chose some tickers that had good value: BA, Snap, CRM, FSOY, Pepsi has a good setup, UPS has a good setup, Uber, GM, I'm just going based off some price action, HD, low, MCD looking for some all-time high levels because they showed strength. So if they can show strength, I do believe that they can drive a lot higher. Because if the market does go green, if the market, you know, decides to come back, you know, to retest some levels and get some bullish sentiment, then for sure we'll see that. But otherwise, we're still going to see a lot of downside for the tech. Make sure you guys keep alerts on Netflix. Like I said, Netflix still looks like it held. Amazon was the other one that's just kind of been holding here. It didn't really sell off too much like Google did. So there's a mixture of a lot of things in the market, guys. JPM is still kind of chilling in this weird channel. GS looks like it broke down to the downside with aggressive volume. So there's a mixture of a lot of things in the market, guys. All right. So if you guys are coming in to plan some trades, make sure you guys are in and out. You know, don't hold what you shouldn't be holding. Make sure you follow your stop losses. You know, respect what's happening with the markets. Don't lose too much. Don't get too greedy. If you get too greedy in this volatile market and you think it's going to be super bullish, the next day it can actually drive back down. And next thing you know, you're sitting there wondering why you bag held a winner when you could have taken profits. So remember that, guys. Please manage that risk. Be cautious this week. A lot of tickers look like they're bearish. Some are making all-time highs. Some are holding their bases. So we're barely hanging on by a thread, and there's a lot of indecision in the market. And of course, we're looking for the news catalyst that has to do with the recession and, you know, some of the tapering, and see what the FOMC is going to say and all this stuff. So a lot of it is volatility, guys. So remember, don't be scared to buy the dip. Don't be scared to buy the breakout. Be more scared if you're going to bag hold overnight when you have a solid runner. Okay. Make sure you take profits, guys, please. But yeah, hopefully this kind of helped you guys gauge into the market as to some of the tickers that I chose for the week. Told you guys that, you know, look at the weekly time frame, look at the 4 hour, plan accordingly, look at things that make sense for you, look at what you see value in, look at the sectors so you can know what's going on in the bigger picture and not just within your specific stock. Okay. Make sure you guys gauge in the full sentiment versus just one little play. So yeah, hopefully your guys' accounts are growing. Hopefully the 1K accounts are growing as well. Like I said, it was never about signals. It's more about showing you guys how to trade and how to, you know, choose these tickers. And if you guys join CC, some of the tickers that I posted, one of them was TSM. TSM was a nice ticker that was played to the downside. Not here. It was one of these tickers. Yeah, it was one of these. It was a setup for TSM. The other one was DAL. Okay, the other one was right here, DAL, and then buy the dip. Jets, same thing. Jets is holding, so this is why. So there was quite a bit of tickers that were posted that could have grown a 1K account at any point in time. So PayPal was also posted. This piece was posted right here, and then of course everything played to the downside. So lots of good plays that were provided, and with the full breakdown, explanation, and everything as what you should be able to look for, and how you can do it yourself as well. So you guys make sure you guys take notes. You know, don't take this like, you know, we know it all or anything like that. We're just trying to show and educate everybody as much as we can. As traders, are trying to give back to everybody so we can all grow at the same time. So yeah, make sure you guys follow. If you guys have any questions, please direct messages at Conservative Collectors on Instagram, you know, tweets, MySpace, Facebook, wherever you guys want, email, I don't care, whatever you guys got to do to get our attention, as long as you guys are growing and asking questions. So hopefully you guys enjoy this. I did this a little more different today and wanted to point out a few things in the market, and then also how I chose these tickers as well. Keep eyes on XBI as well. This is biotech. This is going to be one of my top ones for this week. We kind of look like we're flagging up here, so let me just show you real quick on the weekly. So this is side chart. But yeah, yeah, you guys have a green week, and I'll see you guys next week. Nope, I'll see you guys on Wednesday.